Hi, everybody, and welcome to the weekly market wrap for October 20th, 2017. So normally for the past 6 weeks, 7 weeks, I've been saying there's not much to say in this video because what's been happening is buy the dip, the market keeps on trending higher, except this week is a little bit different. And it's not because the market's not doing anything special. It's that we're starting to see a little more volatility come into the play here. And we once again closed at all-time highs except yesterday morning, which was Thursday. If you look at the chart here, it was kind of mundane, move higher, not a lot of volatility, and then all of a sudden we see a big move down. The global markets on Wednesday night, Thursday morning, just kind of melted down a little bit, and that got the Dow down about 100 points, and the S&P down as well, and it quickly recovered to the point where we just basically fill this gap. So when it closes a lot lower or I should say, when it opens a lot lower than it closed the previous night, that's called a gap down. And that's what we got on Thursday morning. And then when it opens a lot higher than it closed, that's called the gap up. Now, normally when you fill a gap down, you actually wind up seeing that's a positive sign. It's a bullish sign. It means that people are looking to buy and they don't care that the price is moving higher. They're still buying right into where it was the previous day. And when you don't see a gap fill on the gap up, meaning we didn't sell off to get back to where we were closed on Thursday evening or Thursday afternoon, that's a bullish sign as well. So the last 2 days were really bullish. We have a little more volatility, and I think here are the reasons why. Um, we have number one, and I touched on this a few weeks ago. It seems at this point that Janet Yellen, the head of the Federal Reserve, is going to get replaced. So when that happens, the market's probably not going to like that. Okay. I mean, they know about it already. It's not like I know it, nobody else does, but change is not a good thing, especially uncertainty. However, the people that President Trump is looking to replace her with at this point seems like Jerome Powell or John Taylor. Both are not um, controversial figures. So either one is fine with the market. And I think that's part of the reason why the market acted so strongly the last couple of days. Now, the other thing that's coming into play here is tax reform. So, tax reform got a little bit of a step closer Thursday evening when we saw the budget get passed by Congress. So now it seems like there's a real possibility that they're going to pull off this tax reform thing. So if that happens, that may be a situation where the market likes that and doesn't mind too much about the new Federal Reserve Chairman. Um, we're in a scary situation, not because I think that the market's going to get killed or anything like that. Everybody that I speak with about the markets anecdotally, or basically everybody that I speak with, not a survey or anything, but it just seems like everybody's thinking the same thing. So no matter how smart you think you are, I think I am, or whatever the situation is, everybody thinks that we're due for a pullback. Market's doing good, but I'd have to imagine the pullback is coming or right around the corner. Now, the problem with that thought process when everybody has it is that now we're in a situation where if you really think the market's going to pull back soon, you're probably positioned for it. You're in a little bit of cash or a little bit more cash than you'd normally be in, or you sold a little bit on the way up. So what that means is that you've done your selling and you're prepared for the correction. Now, if everybody has already done their selling and they're prepared for the correction, the scary part, what I was talking about that before this long-winded sentence, is that means that we could actually see a hyperbolic trade higher, just kind of a rocket ship take off and get all those people that are either in cash or short the market or a little more cash than they want to be to just say, you know what, this thing's never going to go down again. I'm getting in. And then when everybody gets in, that's probably more of a reason for a top to occur. So once again, I'm not predicting. I'm just kind of playing the psychological game of what is everybody thinking versus what are the possibilities of happening. And right now, um, we're not getting those big corrections that everybody thinks we should or ought to or are due for. And that's part of the reason why I think that there's more of a risk of just a blow off top, just amazing, unbelievable moves in the market higher, just to grab everybody and get them in emotionally, and then then maybe the bottom falls out. But we'll talk about that another day. So so far, as far as the newsletter goes, we're doing great. We're just going to keep on doing what we've done for the last 4 years plus. And I know everybody's a hero in a bull market that doesn't go down, including me. However, we're going to keep our risk tolerances in play and our risk targets there, just in case things start to get hairy. We're not going to ride it out and cross our fingers. We have a plan and we're going to stick to it. So good luck with everything. Good luck this weekend. Enjoy it. And then next week, hopefully, make some more money. All right. Thank you.